assets. CMT is traded in the traditional equities and commodities markets in the United States, Europe, South America, and Asia.
So how long has the fund been in operation?
Yeah, so we launched so the firm invested in Bitcoin.
Well, not Bitcoin. How long has it been in operation in general?
Oh, the firm, 21 years.
21 years, right?
And many different entities in global locations.
And so how many people are trading this capital of the two founders?
So we're about over 100 people.
Wow.
Yeah.
And when did you decide as a company to get interested in crypto? I think that was before your time there, right?
Well, so...
Or you were brought in to help them understand it, to start trading crypto along with their traditional funds.
Yeah, that's kind of it. So I had always worked for them on the legal side, and then told them I thought that they should start looking at Bitcoin. And at the time...
When was that? What time was that?
That was the beginning of 2014.
Okay. Oh, right at the height of the market.
Yeah, yeah.
And you're still there.
I am. I thought they were going to fire me, though. They said it was ironic that their lawyer was telling them to invest in Bitcoin. But what we did, we got really involved on the legal and regulatory side, did a lot of work there, which we still do today. And it took until January of 2016 for the firm to invest in Bitcoin.
You said 2016. Okay, so they invested at a very good time.
Yeah, it was good.
Okay, so let's talk about the investor side of things, right? So because you're trading your own capital, you don't have too much regulation bearing down on you. You can really invest in anything you guys like.
Sort of. So where we do need to be careful, so you're correct that it's proprietary, but the thing that we have to worry about is this whole security commodity debate. So I'll give you an example. So we also have a crypto OTC desk, and if we were to trade crypto that could be a security, then we would automatically have a 1-year lock on resale. So like Ripple, for example, we don't know what Ripple is. The SEC has only said...
I know what Ripple is. Let's see if the SEC agrees with me on what Ripple is.
I stand corrected. Tone knows what Ripple is. We don't know what Ripple is, so we stay away from it on the OTC desk. So that is where we have to be careful, because we've got this regulatory ambiguity.
Okay, so as far as the OTC desk is concerned, the only thing you're probably safe about trading on OTC is Bitcoin.
Bitcoin and
That's
Ethereum.
That's the only one that's legally not a security.
Yeah.
Ethereum, no.
Well, no, I would agree with you. The initial issuance of ETH was absolutely
right, and that's the thing. That statement by some guy at some
Director
event,
Hinman.
I think it's being overhyped. That guy is not even on the team that determines whether it's a security or not. It was basically one guy's opinion that works for some other SEC department, and people are taking it as law. I think it's so misguided.
Yeah, so it was Director Hinman, who heads up the Division of Corporation Finance. His opinion certainly matters, but it's not as if the 4 commissioners backed it and said, and I think that was sort of intentionally done, so if they ever do want to walk back from that, they can.
Right, and the fact that Bitcoin is not a security is actually in court law from the case in Austin, maybe not Austin, but the case out of Texas, Bitcoin Savings and Trust Ponzi scheme that used Bitcoin. And it was stated in court records that yes, Bitcoin is not a security, but it is a financial instrument of value. That's why the guy still went to prison, but Bitcoin was not a security based on that ruling.
Yeah, in 2015, the coin flip case is when the CFTC said that Bitcoin is a commodity, and they took jurisdiction over that.
Okay, so as far as, that's the OTC side. As far as trading and investing side, does the fund only look at Bitcoin, or do other cryptocurrencies interest you from a long-term investment or a short-term trade?
Yeah, so, and I'll answer this in 2 parts. Our only core long position is Bitcoin, and then we tend to only trade in the cryptos, like the top 5 that are most liquid, because we need the liquidity and the volume, and right now there's not much of that. Especially on U.S. exchanges. There's a lot happening on BitMEX, but then on the other hand, we also invest in the space, but these are investments in operating companies. So we have a portfolio that includes like Silvergate Bank, Templum, Circle, so that's a whole nother piece of the business.
Right, actually an ETF was just approved, an ETF that groups together the publicly traded companies involved in the crypto and blockchain space.
Yeah.
All right, so you guys sometimes invest in publicly traded companies in the crypto space. So it
They're
sounds
actually private. So like Silvergate Bank, Circle, those are private.
Oh, okay. So
yeah.
you guys do have
venture investing.
Okay, so pre-IPO investing,
Yeah.
you guys do as well.
Yeah.
Okay, excellent. So it sounds like your fund has a long-term position in Bitcoin, which probably, if you feel it's a bull market, you have more. If it's a bear market, you have less. But some of your traders have free reign to speculatively short-term trade other altcoins.
That's correct.
Okay. Excellent.
Yeah, but I mean, I'm telling you what you already know, but I mean, trading in the crypto markets versus the traditional markets, you're missing a whole set of infrastructure. There's no prime broker, counterparty risk.
What always worries me is people say hedge funds are getting into crypto, or Wall Street is getting into crypto. And I have a hard time believing that they are, because here's the thing, the difference between your fund and a standard hedge fund or a standard like retirement fund or a company is that you don't trade money for strangers.
Right.
You trade money for like 2, maybe 5 people, like a small group of people, and they give you the permission through that. Like, I don't understand how a hedge fund that is trading money on behalf of 100 investors can email their investors and inform them that Bitfinex got hacked and 30% of their Bitcoin is now gone. Like, I don't understand how that's gonna, why would a hedge fund take that risk?
Well, yes. I mean, so people keep talking about this proverbial wall of institutional capital that's coming in, and it's for those reasons that it's not yet, right?
Yeah, that's what I'm saying.
No, I completely agree.
It's just hype. Everyone is saying Wall Street's getting in, Wall Street's getting in. I have not seen it at all. I think it's just hype to get you to buy. Wall Street may get in, maybe if the ETF is ever approved, which we should probably talk about, but right now next. But I don't see how, from a regulatory perspective, a company with 100 employees can justify the elimination of their company for something outside of their control in an unregulated space if, let's say, some hack happens.
Yeah, no, I mean, I think when institutional capital comes in is when you have real prime brokers sitting in between trading firms and the exchanges, when you have mature borrow and lending facilities, when you have mature custody solutions, when you have real trading tools, when you have real technology stacks. So all of this just needs to mature.
So what I was thinking, the recent announcement with ICE doing their back exchange, and they wrote all the good buzzwords, and it sounded like they were going to have like a warehouse, a crypto warehouse. I know ICE has a relationship with Blockstream that built the Liquid box, and the Liquid project is supposed to transfer liquidity in the form of Bitcoin between multiple exchanges seamlessly. So when I saw ICE launching an exchange, what it felt like to me is that they are actually going to launch an exchange like a NASDAQ. And not a broker like an E-Trade.
Well, I agree with you.
That's what I thought they were going to do.
No, you're right.
But it doesn't sound like that's what they're doing. It sounds like they're going to be just another exchange and broker. What they should have done was built an exchange and prove they have the best Bitcoin security in the world. And then all of these Coinbase and or DAX of Coinbase and Bitstamp and Bitfinex and Poloniex, they'll just become brokers. Don't have them be responsible for the storage of the Bitcoin. This is how the stock market works. You have New York Stock Exchange, you have the NASDAQ, they're the exchanges. The things that you actually have accounts with and KYC with, that do your taxes, give you a summary, give you help support, these are brokers.
Yeah, and I think that's probably the long-term vision for Bakkt, because right now those one-day Bitcoin futures contracts will be listed on ICE Futures US, and then they will have the CFTC, it needs to be approved, warehouse for Bitcoin, but I think it can go in the direction you're saying it should ultimately go in.
That's where I think it should go. I'm not saying
and it's
a
fully
good...
collateralized too. There's been a lot of press about it being like unbacked claims on Bitcoin, and that's not what's going on.
I'm not saying this is a good thing because it will make me nervous having a giant pot of Bitcoin sitting in one place under potential government confiscation if they decide they don't like Bitcoin anymore. So that part is going to worry me some, but at least you won't have, oh, we got hacked. Maybe it's internal, no one knows, maybe we just stole it.
Right.
At least we'll eliminate that part of the ecosystem.
Agreed. Yeah, and I mean, it is directly under CFTC oversight too.
All right, so let's talk about the ETF.
Yeah.
I'm sure you guys at your fund, it was a big topic of discussion. What were you guys thinking going into this month? Is the outcome expected? And what are you guys hearing? Or, I mean, this is, you guys are probably all over that news. What is your general opinion on SEC versus Bitcoin ETF?
Yeah, so I think the one that we weren't sure what was going to happen was the Winklevoss Trust. And then after the SEC rejected that, we sort of anticipated that these Bitcoin futures-linked ETFs would be rejected. What we didn't expect was the stay yesterday. So we assume it was Hester Peirce. She's the commissioner that did the dissent on the Winklevoss ETF. So we assume it only takes one commissioner to order that stay. So she stayed all 9 rejections, and the only way that stay is lifted is when the commission files a motion to lift it. So those 9 rejections are now under review. Now, so I would still assume though that 3 of the 4 commissioners are against this.
Right.
And she was just trying to send a message to the market that she doesn't think the SEC should be a gatekeeper of innovation. Which, I mean, I think people in the, we appreciate her doing that. I don't know that it's going to work because the rest of the commissioners really believe that you need to be able to surveil the spot market for fraud and manipulation, and right now we just don't have that. Even with the CME and Eobot Bitcoin futures, they're saying that the market's not.
Right. Well, that was one of the. I think this is one of the most interesting stories in traditional finance. The CFTC approved CME's futures and CBOEs, and then recently the CFTC wanted more transparency on how the CME determines the underlying price of settlement for their futures contracts, and they had to reach out to the exchanges that they had a contract with to make that underlying settlement rate, and they wanted more transparency in those exchanges, and some of those exchanges are not cooperating.
Yeah.
And it's creating this problem between the CME and the CFTC.
Yeah, I mean, it's tricky. And then when you kind of look at this on a macro basis, the majority of the volume is happening offshore, BitMEX, OKX, which the SEC is not.
Right, but but BitMEX and OKX, they're not price discovery mechanism because they're futures themselves, and they settle within their own system. So you can have cash settled futures and Bitcoin settled futures. So I don't see those exchanges, neither the CME nor the BitMEX, as contributors to price discovery.
Yeah, and I think BitMEX's product is tied to Coinbase and Bitstamp. It settles to those.
Right, they're using Coinbase and Bitstamp. Actual people that are actually putting cash to buy Bitcoin or selling Bitcoin to buy cash.
Yeah.
Right. So your opinion on the ETF? Well, did you guys want it to happen? Did you want them to approve it?
Sure. I mean, I don't know that we would be actively trading it. I think it's generally good for the market, though, to show that we're allowing innovation to take place in our markets in the United States, because I think right now we have a problem of regulatory arbitrage where we have people leaving to jurisdictions where there's more regulatory clarity. So yes, I think overall it's good for the health of the markets. I don't know that we would necessarily be trading them.
Do you guys trade GBTC at all?
No.
No. That's the one that has that
a nice premium, yeah.
Right, because I always said that was a very poorly designed, that's why it trades at 100% premium.
Yeah.
Okay, so here's a question for you. We kind of touched on it already. Do you think that, because right now, I think we have almost the worst of both worlds. We have multiple exchanges in crypto with multiple liquidity pools, completely unregulated. Do you see this becoming more centralized, like what we discussed 5 minutes ago with Bakkt, like a warehouse of all the Bitcoin, and then all of these exchanges just become brokers with one pool of liquidity, totally centralized, totally regulated? Or do you see it going in the opposite direction with these decentralized exchanges and atomic swap contracts where there's no middleman and you can exchange your crypto for crypto, though I'm not sure how that would work with dollars for crypto unless Tether and the Tether Chinese clone, I forget the name, are actually viable and trusted.
Yeah, so the way we think this is going to go is that you're going to have a number of different centralized crypto exchanges, and I understand the irony in saying that you have centralized exchanges and a decentralized new asset class, but I think realistically, when financial institutions come in, large regulated ones, they have to trade on institutions that are centralized and have some regulatory oversight. Just this morning, Bittrex partnered up with an ATS, and I think we're going to continue to see that. So these exchanges have the ability to trade tokens that are deemed securities. So I think you're going to continue to see the centralized exchanges, and then I think you're going to have side by side the decentralized exchange marketplace. And I think institutions like CMT that are prop trading firms will be able to participate in both of those liquidity pools, but like large regulated institutions like Fidelity are unlikely to go into the decentralized
Right, I agree.
Yeah.
I think the future of Bitcoin trading is centralized and regulated if you wanted to go to the next level. Because I just don't see, for me, I just don't see how people will trust a decentralized exchange because it's still centralized. Someone has to maintain that code. I don't see how someone would, I mean, you would trust a decentralized exchange with the movement of your money the way you would trust a decentralized driverless car putting your life in their hands where no one is actually responsible for that code.
Well, yeah, so I agree with you. I always think it's interesting when we're talking to decentralized exchanges about potentially investing, and we'll ask them, especially decentralized exchanges that are trading derivatives on crypto, because that would mean that they fall within the CFTC's jurisdiction and should probably be registered with the CFTC. So the response is inevitably, well, we're decentralized, we don't need to be regulated. And I'm like, well, I'm talking to a human on the other end of this phone.
Right, exactly, exactly. You're not talking to an AI yet.
That's right. I'm like, so I think you have a problem.
Right. Okay, so one last question for you, and then maybe you can throw some at me. So you guys have recently opened an OTC desk. So OTC desks in crypto, these are like large scale Bitcoin transactions, either buys or sells. The ones where if a person wants to buy, 1,000 Bitcoin, 10,000 Bitcoin, and that person A, doesn't want to mess around with exchanges, or B, doesn't want to move the market. So he wants to go to a middleman, that middleman is going to connect them with a rich person with cash, or the flip side, a rich person with a lot of Bitcoin for sale, or a rich person with a lot of cash looking to buy Bitcoin, and you guys brokered that deal. Have you seen, because everyone always says the volume at these OTCs is through the roof, but from what I'm hearing in my back channels, a lot of it is just talk. Everyone just wants to know if they can buy 10,000 Bitcoin, if they can sell 10,000 Bitcoin, but 90% of those deals fall apart in the last hour. That's what I'm hearing, and that's why so many OTC dealers are incredibly frustrated.
Yeah, so we are admittedly late to the OTC game. We were trading on exchange first and investing in the space. So I will have more data points for you on that later as we continue to grow that business. But I will say generally, I feel like there's a lot of price discovery out there. We're kind of getting calls for quotes and people are trying to see where they can lay this stuff off, but not necessarily moving on it, is our understanding too, that there's a lot of noise, but not a lot of actual trading.
Yeah. All right.
Well, all right. I'm curious what you think of the events at BitMEX a couple nights ago when they went down for maintenance. And
yes.
Yeah, I'd love to hear.
Okay, so whenever you have whenever you're holding a large position of something, and the market moves against you quickly, it's always manipulation. Always. It doesn't matter the reason. Always manipulation. Like gold's been manipulated for 40 years. Yeah. But that's the view. So here's the thing. BitMEX told you, like, I don't know how many days in advance, but I know that I saw the notification on the BitMEX terminal like a day or two before the maintenance shutdown of their exchange. They sent out a tweet saying, in a few minutes, we are going to go down for maintenance. They gave you plenty of warnings. If you have a leveraged position in something speculative, and you know your exchange is not going to be functional, you may want to get out of that position, and you may want to come back after. It's kind of like you're holding a stock, you know they're going to announce earnings after hours, and somehow you're surprised when your position blows out if the earnings moves in the opposite direction that you expect. Now, I've been telling people on my YouTube channel that the shorts are over-leveraged. So if a whale, and the definition of a whale is relative considering the crypto space, so if a whale with a few $1 million wants to move the market and crush the over-leveraged shorts, that's not manipulation. That's a guy with more money than you trading. So obviously the way to knock out the most people and cause the most pain is to move the price up because the shorts were over-leveraged. If the longs were over-leveraged, it probably would have gone the other way. So if I was a big player that knew what I was doing, I would have waited for BitMEX to go out, and then have a big position in BitMEX in the opposite direction, and move the price on exchanges that are doing price discovery. This is not manipulation. This is smart trading by someone that knows what they're doing better than you if you got wrecked on that trade. Now, we can have a separate discussion why one of the most capitalized, most liquid, most profitable exchanges is going down for maintenance without your ability to trade, but that's a different discussion. That's not a manipulation discussion. That's a different discussion. Now, I will also add that unlike traditional financial houses and exchanges that have off hours to do this stuff, Bitcoin doesn't. It's a 24-hour market. So if they have no choice, they have to pick the best time, it turned out to be the most inconvenient time, but like, they have to go down if they want to upgrade something for security purposes. Like, I'm sorry guys, it's not, now if you can prove that BitMEX was involved and BitMEX did it on purpose, if you have some kind of an evidence that BitMEX was involved in this and they profited from this, then I'll eat it. Yes, then it was manipulated, and probably, you know, there should be criminal charges or civil charges. Obviously, these people should be criminally liable if the senior management of BitMEX had something to do with that price move and they profited from it. But unless you can prove that they did that, it's not manipulation, guys. I'm sorry, you need to learn how to trade.
We agree, yeah. I think you're right. All right, altcoins. Just want to hear your view.
Sure.
We have to give the people what they came here for, Tom.
Maybe, and after this, maybe we'll have time for questions, unless you have another one for me. We still have about 10 minutes. So, I break altcoins down into 4 categories. Maybe I should make it 5, but there's 4. Or should we actually, wait, I'm gonna do 4. Bitcoin doesn't count. Bitcoin is Bitcoin. Bitcoin competes with US dollars, the euros, competes with gold. Bitcoin competes on a global scale of an actual currency and store of value. Bitcoin doesn't compete with old coins. Bitcoin isn't competing with Bcash. It's not competing with Zcash. It's just not, okay? Old coins are competing with each other. So we have Bitcoin. Here's how I break down the old coins. You have Bitcoin clones that want to be Bitcoin. These are honestly created proof-of-work blockchains. Monero and Litecoin are the 2 most popular ones. Honestly created, non-for-profit, nobody really profited. They're around. I don't think they're going to succeed. Please read the Bitcoin Standard and Saifedean's book to have the details as to why. The next batch is proof-of-work blockchains that were created as for-profit companies. These are your Dash, formerly Darkcoin, because of the Instamine, your Zcash, because of the 20% founder reward coming off the blocks. So these are, you know, get a bunch of people in the room, fund an idea, print a bunch of money for yourself, but keep it a proof-of-work blockchain. Then we have the proof-of-stake nonsense of platforms for ICOs. Now Ethereum is still proof of work, wanting to go proof of stake. Most of the other ones are proof of stake. EOS is proof of stake. These are your, you know, proof of stake is not a blockchain. And again, a bunch of people got together, printed money for themselves. The only use case they have found so far is to launch ICOs, and most of them are ICOs themselves, makes this complicated. And they're launching these ICOs, so their use case is to separate unqualified investors from their money in the form of lottery tickets that they don't understand to fund these ICOs. That's the only use case. So I've ran across 1 or 2 ICOs I consider, you know, legitimate ideas, not good, not speculative plays, but at least honest projects, not for speculation. They're actually like using some of the bearer instrument, anonymous coin transfer in a decent way. I don't want to name them. I don't want to pump any tokens. I don't think they're going to appreciate in value too much because they have a use case and not a pump and dump case. And I think all of these ICOs and all of these platforms for these ICOs, I think they're the .coms of the 90s with a fancy website, no clients, no customers, just an idea, and people are trading them. So to me, the only thing relevant in the space is only Bitcoin.
Thank you. You know, I was watching one of your YouTubes, and you were talking about the difference between sort of the crisis in Greece and what recently went on in Turkey, and I thought it was interesting where you went with that, so I'd love to hear your thoughts there too. Yeah, I think they're actually very different. I think the events of it all started with the events of Cyprus. We had the European currency crisis in 2011, but Bitcoin was way too young to take advantage of that. I think Bitcoin took huge advantage, and by Bitcoin I mean the ecosystem itself. I think Bitcoin took huge advantage during the Cyprus incident, and I still talk about it all the time. During the Cyprus incident, money was actually confiscated from people's bank accounts. Bank accounts were shut down. All money above 100,000 euros was confiscated at a 50% clip. That's a great use case for Bitcoin in that, and that banking system wasn't shut down for long. You got your bank account back within a few days. You just had less money in it if you had money in it, like a substantial amount of money. So this gave Bitcoin a use case in the term I call unconfiscatable. Love that term. I own the .com. I have I'm gonna start. I don't want to promote a conference at a conference. Let me stop. No, you should.
No, I should.
Do it.
I'm gonna put on my first Bitcoin Maximalist conference. It'll be called Unconfiscatable, and it'll be the unconfiscatable.com. So the website is gonna launch in a couple of weeks, and it'll be really cool. So that's when I got off my couch, and I'm like, holy shit, I gotta buy some Bitcoin. because I had a good job. I was working on Wall Street. I was making 6 figures. You know, like, I don't want my money confiscated. You know, we were all listening to Ron Paul back then, you know, and that whole libertarian movement. The government is coming for your 401k, you know. They're going to confiscate that. They're going to put it in government bonds. We all heard this. And so I'm like, oh man, I got to put my money in something that's unconfiscatable. And the Cyprus incident proved it to me, that Bitcoin is the unconfiscatable asset, and that developed governments like the Euro will come for your money.